Hello, 4 Year Journey followers. This is Bob Lucas. It is June the 12th, 2020. I hope you're doing well. This is yet another installment of the 4 Year Journey videos and series. I can't believe it's been a year and a half since the very first video. Time has flown by, it seems, and like it always does. And, in that period, we've seen really massive moves in volatility in Bitcoin across the board. We've seen 300% rallies in a short period of time. We've seen 60, 70% declines. We've seen multiple 30% declines. I've also heard from a lot of people that have lost a lot of their Bitcoin, a lot of their capital. They've tried to get some of it back and they've lost even more. It hasn't been pretty for a lot of people out there. I think a lot of people missed a lot of the big moves, but of course they were involved in a lot of the big declines in the market. And that's part of the problem with trying to be an active trader when you really don't have the skill set for that. For some people, they do have the skill set and they can do really well. But for the vast majority of people, trading such a volatile asset is really not an easy thing to do. It's really for somebody that has a lot of experience trading such volatility and trading markets that it's going to do well. And even then, there's no guarantee, of course. But for everybody else, hopefully for all of you who have followed this journey or a similar hodl story, the year and a half has been, I guess, pleasant, right? Because here we are sitting a year and a half later, the market is up almost 3x, Bitcoin's up 3x. But more importantly, you hopefully avoided these massive volatility swings in the market and sat patiently and comfortably. And if anything, you used sell-offs as an opportunity to add to your position. I did a couple of times. More recently, of course, with the March capitulation, I found that was a really advantageous spot to add more exposure. And I think in the long run, that's going to prove to be a good decision. But my point is that when you can take a step back and remove yourself from the volatility, remove yourself from the emotion that's associated with trading something like this, and not look at it as a get-rich scheme, but look at it as an investment for the longer term, it gives you a sense of clarity on the market that people who are involved on a day-to-day basis don't get to appreciate. So that's one of the major benefits of having a more longer-term hodl type strategy, where the goal is to take advantage of Bitcoin's appreciation in price, hopefully, of course, over the longer duration of a 4-year cycle up to what should be a blow-off-like environment at some point, possibly next year. And that's the point where hodlers of a 4-year journey will get greedy and begin to take some of that profit and get rewarded for their patience over these years. So that's the intro for this video. The agenda for this video is as follows. Of course, we're going to cover the 4-year cycle, a status update, and then I'll try and sort of go through relatively quickly the remaining points. These are questions that came up mostly during my request for feedback on what you want to hear in this video. So I'm not going to read them out. It's on the screen there. You can see. I'll go over those. Some will be short and the others will be in depth, but we'll cover those. So let's start with the current 4-year cycle update. So I thought I'd do this a little differently today than I have in previous videos. I'm going to start out with the monthly view, the long, super long cycle view at the 16-year level, and then condense it down to more of a daily chart view. Hopefully that'll give you a better understanding of this, and also to avoid kind of repeating almost the same information for the last year and a half. So looking at here, 4 boxes represent 4 different 4-year cycles. We've gone through 2, we're now in the 3rd, and here's the future one from 2023 through to 27. That's a future 4-year cycle. In all, this will become one 16-year cycle when all is said and done. 16 years is important. A lot of asset classes move in 16-year longer term cycles. And because now we have a pattern of 4-year cycles, also matches sort of the halving schedule as well, even though they're not aligned. 4 years is a typical cycle length in many other asset classes as well. So when you have a 4-year breakdown, the longer duration cycle from that point naturally becomes something divisible by that. So a 16-year cycle also makes sense. We see this quite a lot. we're into the third cycle of that. And if you believe in this massive uptrend, if you believe that the current market cap at under 200 billion is not sufficient for any type of major long-term top, as I do, then you still believe, again, as I do, that we're in this longer-term secular bull market uptrend. And that bull trend uptrend ends with a massive blow-off top that, in theory, would put this 2017 blow-off top to shame, and also this one, which is a bigger top percentage-wise than the previous one. So you eventually end up with a big blow-off top that concludes the bull or rising portion of a 16-year cycle. So what you end up having is 3 cycles higher and then 1 cycle lower, where typically the last low in the 16-year cycle low would actually come down and break below the 3rd cycle low at that point, and this becomes your real secular bear market, which every asset class goes through. And I can say this confidently, that eventually I think Bitcoin has to go through a secular bear market, not something like this, which I consider more to be cyclical in nature. These are more corrections, cyclical bear market corrections in a secular bull market uptrend. Eventually we get a secular bear market to go with that. And that's probably going to correspond with some major government response, some type of major on-off-board ramp restrictions placed by, whether it's governments, central banks, whoever the players are. There'll be some major attack that has an impact on Bitcoin in the future. It won't kill it, of course, but it will cause it to move into one of these secular bear markets. And by that, I mean something that is more of a 3-year decline as opposed to these 1-year cyclical bear market declines that we've seen during the previous 4-year cycle. So you can see the pattern here: up for 3 years, down, up for 3 years, down for 1 year. I expect something similar here, where we go up for 3 years, maybe even longer in this 4-year cycle, then come down, and then a quicker acceleration here to make way to set up for a secular bear market into the big 16-year cycle low. Now, it's not assured, we're not assured of this right translated 4-year cycle going higher yet, because we haven't exceeded the highs from the prior 4-year cycle. In fact, we haven't exceeded the 14,000 high that we set early in this cycle. So there is risk here still. But the reason why I'm still confident is, 1, I think Bitcoin's adoption is still there. 2, I don't think the market cap warrants yet any type of secular bear market to occur here. 3, I still believe in a 16-year longer term cycle. So I don't think at this point in its 11 years of evolution, it's too early for that secular bear market to unfold. And 4, we've already seen a couple of cyclical bear markets. We had the one coming down into the 4-year cycle low, but this here as well has acted as a cyclical bear. So it's been almost back-to-back bears, broken by this surprise, which was a surprise for most, this surprise surge early in the cycle. So as you can see, 192 monthly bars is 4 years. You've got your 48 bars going across for the 4 years. Each of these boxes represents that. Red tops here correspond to a right translated cycle. As you can see, the red arrows are appearing well past the midpoint. That creates the right translation. Anything that's right translated typically means it goes up. And the reason for that is simply that it has more time in a uptrend versus time in a downtrend. So it stands to reason that there's more likely that price will accelerate or will move higher over time. And the same I expect to occur in this cycle here, being a right translated cycle to the top right there. However, where the top occurs in a cycle is not dictated necessarily by the 4-year cycle. The top dictates the translation of the cycle. So if this 4-year cycle wants to move higher, then you're going to find this top is going to occur in the second half of the cycle. If we're looking for a top to occur early and to go into a secular bear trend, then you're going to look at the top to occur to the left of the midpoint, giving it more time to to unfold into a secular bear market. What is more fixed in duration is the low. The cycles are measured always from the low, and the reason for that is the top here dictates the translation. So if we start measuring cycles from a top standpoint, and you get a situation where you have a left translated cycle, then you're going to have a duration, short duration from one top to the next, and that does not give you any consistency in cycle duration. So we see in every asset class, we see the tops occurring sometimes months apart and sometimes years apart, or depending on a time frame you're looking at. So if you're looking at a 60-day cycle, or whether it's a 1-year cycle, 4-year, 8-year cycle, the point is when you compare cycle after cycle after cycle, the duration between tops are basically, they correspond to the overall trend on the higher time frame. So if we have a higher time frame moving higher, then you're going to have these wider duration tops. But then as you see a reversal in the longer term trend, so if the longer term trend's going higher and then wants to reverse in a secular trend, then you're going to see tops occur much closer together as a result. And that's how you get the translation in the cycle, allowing it time to move lower. So the anchor in every cycle is always the low. The low to the low to the low is a process that is repeatable and typically will fall within a window. Now, of course, 4 years to the month is only a guide, right? A 4-year cycle can be 3 or 4 months early, 3 or 4 months late. It will vary on many factors, but essentially the duration is relatively close within a certain range. And the cleaner the trend that you see, the cleaner the cycles from duration standpoint will occur. When we see reversals in a longer term trend, then you may find that some of these lows will not be exactly the 4-year cycle point. Point being here is that, for example, if we're looking for a major trend reversal on the 16-year cycle around the 2023-24 time frame, then it's possible that you see a shorter duration cycle right here, giving it time for a shorter, fast decline and then a move higher. So that's just something to look out for in the future. Or the alternative is that the top occurs much later in the cycle, giving it only just 5 or 6 months down as a sharp decline and then moving higher. So you're still having a fixed sort of 4-year cycle length. This is kind of similar if you go back and look at, say, a NASDAQ chart from the 1990s, where you had in 1998, you had a massive drop over a short period of time, and then you had this sort of V rocket up. So you had a top in a cycle, then you came down, then you had another quick top, and you formed a top in 2000 before you had more of a secular bear market. So you had this dot-com move in 1998 to a real big peak. Everybody thought that was it. You had a correction, then you had another move higher that was sharp and quick over only just a year and a half, and then you had this 3-year sort of really severe bear market low or decline from sort of 2000 to 2003. And that's kind of similar what I'm looking for here in Bitcoin in the future when it comes to the next big top and the next big secular bear market. The other thing that we don't know is how price responds between these major pivots in the cycle. And that's where I think a lot of people kind of get caught up. They're like, oh, you said it was going to do this, or you said it was going to do that. And the point is that when it comes to price in a cycle, it's pretty wide. It's open to how it gets to a certain point or a certain pivot. What I'm trying to illustrate more than anything else is the longer term trend being higher, and the major turning points, the points where I want to be looking to add and the points where I'm looking to be getting out. And I'm not necessarily focused on being right on a week-to-week basis or a month-to-month basis, when really my goal are the big pivot points. And I've been focusing from the beginning on these big pivot points. And I've talked about the prize, and I've used the word the prize often, the prize being up here at this $150,000 to $200,000 level in the late 2021 time frame, maybe into 2022 as well. This is what I'm positioned for. So if I get a price projection wrong, as I did kind of in this big move here, to me it doesn't matter, because the way I'm allocated from a risk and an investment standpoint doesn't reflect a move like that. Such as, for example, this big capitulation in March. I wasn't positioned for that It didn't worry me, therefore I didn't get out. If anything, I bought because of where we stood in the cycle. This gave me confidence to buy into that, as opposed to forcing me to panic and get out. As opposed to also in this area here, when the market hit 20,000, started declining, for me, that was a point to be getting out, because the structure started breaking down and we were deep in the 4-year cycle. When you're early in the 4-year cycle and you've already made a run and you start seeing sell-offs like this, for me, those are accumulation of buy the dip opportunities, and that's what I use those for. So where do I think it's going from here? Well, look, again, caveat, nobody knows exactly how price unfolds. But I believe we've had this, this structure here has been different to the past, and I think this has been troubling or difficult for many people to invest in. And I think this has caused a lot of hardship for some people, because they do have this mindset, this longer term blow off in mind, and they're trying to time it on the shorter time frames, and they're losing out. And this big move here was a massive suck in of retail and a big trap. And this bear market here has been in many ways worse than the one we saw in 17. And that's caused problems for a lot of people. But right now, I think this capitulation here ended the bear market. We're now recovering and have recovered, and we're seeing heavy accumulation, in my opinion. And we're now bumping up against that 10,000 to 10,500 area, which is acting as significant resistance. It's both a very psychological point, and there's a lot of resistance at that area. And it's going to take some more time, perhaps, maybe another month, maybe another 2 months, before we eventually test it a few more times. And I think once it gives way, we won't be looking back. And I know, and that $10,000 level is very important, because you see it all over social media. So many people talking about, hey, you know, we'll never see sub 10,000 again. And then, of course, we do. It's an extremely psychological area. Even when I flip to a weekly chart, for example, you'll see here and these arrows represent the 60-day cycles. Many of the cycles are hitting up against this $10,000 to $10,500 area. We also had a sell-off at that area in the past. And if you look at these candles, these weekly candles, we've only had 10 weekly candles in this 4-year cycle that have closed above 10,000. And 8 of those 10 were within $400 to $500 of 10,000. And we've got another 7 candles, weekly candles, that are closed within $300 or $400 on the low side of 10,000. So there's a lot of closes, a lot of weekly candle closes at that $10,000 level. So there's an extreme amount of resistance built up in that area. We also see from a price action standpoint, you know, obviously we went up higher here, and then this bear market, once we drop below that, we're now starting to hit up against the underneath of this area. So I think it needs a couple more maybe attempts at that level before we can break high. But once we clear this area, therefore, I don't think we'll be looking back. We'll also, looking at the 4-year cycle, we would have advanced to the point where we'll be almost at the midpoint of the cycle, and it will be now time for the cycle to begin the heavier accumulation, and less of the selling is going to allow the price to start to resume its uptrend. It actually already has resumed its uptrend, in my opinion. As you can see, we're above the 10-month moving average. But it's going to start to accelerate that process, as you see in previous cycles. So that once you're done with the accumulation, once you start discovering higher prices, there's less resistance in that area. There's more willingness from parties to start to get involved as you clear these psychological hurdles, and then you start to build on that sort of snowball effect, and you start to go higher. So I think we're at a critical juncture right here, where we're going to be looking for more of that accumulation to start to snowball. And once we clear that $10,000 range, I believe it will be released, price will release to the upside. And there will be some other points around the 11.5 area, and then of course 14, which was the high last year, that will provide some resistance, but I don't think it will be significant enough to hold back Bitcoin and the price for any sort of extended period of time. So looking at the weekly right here, what do I think is going to happen? Again, this is not a trading call for any of you. This is just kind of an idea. But what I actually would like to see, or what I think this chart maybe even needs, is a decline back into a July low. So some more perhaps consolidation in this area, maybe even a quick surprise test up, but then a move lower into July. I'd like to see that hit the $8,000 range, have an 8,000 handle, but even preferably a 7 handle would be just fine, and I don't think causes any concern on a longer time frame. It also helps to sort of form the inverse head and shoulders pattern that's kind of developing here, with a couple on this side, a head in the bottom here, and a couple of cycle lows beneath that, and then come back up and sort of test the 10,000 one more time, maybe even 2 times, and then break free. Once it does that, I think there's not as much resistance in this 10,500 to 14,000 range. We may even pop right up to 10,400, come down, form the next cycle low in September, come back up, and again, then this point, like I said earlier, price will unfold the way it's going to unfold. I'm not here to predict that, but you can see the 60-day cycles kind of forming. 60-day cycle lows will serve as shakeouts in the bull trend, and as you saw, if you go back and look at a 2016 and 17 chart, you have a nice big uptrend, but when you sort of zoom in at the daily level, you see 25 and 30% pullbacks often, and that's just Bitcoin. It has an extreme amount of volatility, and once you see a nice sort of spike in a 60-day cycle, you got to watch out for these 30% declines that will come rapidly as it makes its way higher. Okay, so you will see probably every 60 days, you will see a 20% decline to a 30% decline all the way as it makes its way up. Now, where do I think it breaks all-time highs? I don't think it breaks all-time highs for almost another year, and probably not until, excuse me, the April time frame. And that's what I've looked at since the beginning of these video series. Around the April time frame of next year is where I believe it eventually it probably gets a lot of resistance to that $20,000 level as well, similar to what it did. If you look back here, we had some at the last high. So if you go back to the 4-year cycle high in November of 2013, once it came up to this area, it hit once, came back up, pierced through, came back down, and then moved higher. I think we'll see something similar. Who knows how it unfolds? It may be just one 60-day cycle, but the point is that that's going to be the last kind of major resistance at that $20,000 level. Of course, another psychological point, but of course, it's also all-time highs. Once you break all-time highs, then price will really begin to accelerate. That's when you're going to get the full retail mania comeback. You're going to get folks who were involved in 17. You're going to get all those hundreds of thousands of people that opened up Coinbase accounts in 17 that never got a chance to fund them. They're suddenly going to come back and they're going to do the same thing again. They're going to repeat the same mistake that they made in 17 because their neighbors are going to be making money and everyone's making money again, of course. It's the usual retail mania characteristics and behavior that you would expect once it makes that $20,000 level. The move up to whatever that top is in the 4-year cycle will be quick, probably only over a 4 to 7 month period. It typically works that way. And as you can see from this chart here, you've got sort of April timeframe being in this area right here. Then you've got just 3 or 4 months to go higher. You saw it right here when it broke out. It was just around 6 months to a top. It broke out really in April and peaked in December. If it breaks out here in April again, you're looking at possibly a peak in February. Who knows? December. Again, we don't know where those tops will eventually occur, but the point is that the final phase here from all-time highs to the top of the 4-year cycle happened very, very quickly. It's when we break that $20,000 level that we start to go on high alert for possible topping action. And that's when we start to say, okay, as everybody's starting to come into the market with all this dumb money, we've been accumulating in the $3,000, $4,000, $5,000 range. We're going to start to say, I'm going to take some off the table. Even though it's early, I'm going to start to harvest my profits. I'll harvest some of those profits early on so I don't feel the need to sort of panic at 20 and 30% retracements. Don't forget, a 30% retracement at the $50,000 level is not pretty, right? If you're looking at sort of $10,000 declines in Bitcoin on the way up in that final phase, it's going to be difficult to hold a very big profitable position and watching Bitcoin drop $10,000, which would be just a little shakeout. Well, not a little shakeout, but just a shakeout in an uptrend. The point is that if you can start to harvest some of those profits in that blow-off phase, it's going to allow you to hold through those $10,000 pullbacks. I wouldn't suggest at that point adding, but it's going to allow you to hold to the eventual top where, of course, the goal is going to be to release and take profit on the larger portion of your position. All right, so the monthly, how does it unfold? One down, July. Okay, let's go even as low as, if you look at these two candles here, the bottom of the candles right here, $6,000 level. Hey, I'm fine and will not be panicked by a drop to $6,000 over the next month. We can handle that, but here's the point. But first test, here's the April time frame, here's the breakout, and then as you can see, it steepens rapidly at this point to a top. Okay, and I've marked the top at 197 in this chart. Again, it's an arbitrary number. I couldn't tell you what that top's going to be. It may be just as low as 50 or 60,000. It may be as high as 250,000. I'm not here to give you an exact price prediction. There's plenty of people on social media who want to give absolute numbers for a peak. I don't want to do that. I'm more focused again on time. I'm looking at April for the breakout point. I'm looking at sort of end of the next year for the peak. That's my cue. And then we're looking at that decline then into the bear market low, and then, like I said earlier, another big peak sooner than we've seen in the past to set up that left translated cycle. And then I think we can actually see a secular bear market unfold where we even get below this level and we make multi-year lows. Perhaps we even get back to the peak of December of 17. That sounds like a ridiculous claim coming from a price of, say, $400, $500, $600,000. But if you look at the NASDAQ as just one perfect example, back in 2000, it retraced like something like 90% of price. So we can see really massive secular bear market declines in the future. Now that's, of course, for a video well into the future, but just kind of giving you an idea of the longer term structure that I see over a 16-year cycle. So this is what we're looking for. We've been patient here for well over a year, and it's helped. It's really worked being patient. Now I think we're in that very, very interesting phase where there isn't, in theory, again, if we believe in this secular bull market uptrend, there isn't much time left for Bitcoin to begin that real awareness phase leading into the retail phase. And that's why I believe this accumulation phase is going to start to unlock higher prices, and especially once we clear this $10,000 area, which is a lot of resistance. So if we can get this pullback here into July, come back up, this is the point where if we cross above and we close a number of weeks sort of above that $10,500 area, that's where I would probably join some of the social media talking heads in saying that sub $10,000 is come and gone and not to be seen again. But again, ideally, I like to see one more big pullback in there and then move higher and then break up. So this is kind of the pattern, similar here on the monthly, same structure as we see it right here. That follows previous structures, not exactly, but kind of in the same fashion. It sets up a 4-year cycle trend, and then we go up to a top at the weekly level. How does that compare to what I showed a year ago, or actually more than a year ago, almost a year and 3 months ago? So let's look at that picture. Okay, so here's a screenshot from the 4-year cycle video from early last year. And this, again, was just a guide, right? This is kind of, I gave you an idea of how it might unfold. And I said back then that here's sort of that March, April 2021 timeframe where I think we would get to the $20,000 level and start breaking out. That we would have just a short run to an all-time high and a peak in the 4-year cycle. But as you can see here, I was kind of thinking we'd see a much more accumulation below that $6,000 level before kind of breaking up. I'm really not showing, here's May, so here's sort of the June timeframe where we are today. I'm really only showing the $9,000 price point for the first time in April of 2020 right here. So, and then a peak here, this line here, it corresponds with around 12,000. So we're kind of exactly where I was thinking a year and 3 months ago that we may be at this point. So this is the second point in the agenda, and the question I got quite a bit, are we still on track? Does it look the same? Well, I would say looking at this that we are. Of course, as I mentioned, how we get to that point and how we got to this point differs, but that's not the point. The point is that the prize is up here, and therefore we can also say that how Bitcoin gets to a top will differ as well, most likely. But the point is, again, that we're looking at time. So if I go back to this chart here, we're now at this $9,500 level again in this time frame, and I'm outlining something like this. Well, again, we should not be surprised if Bitcoin runs and takes a touch of $20,000 sooner, or maybe it takes a longer path again, and maybe it just scrapes along below $10,000 for the next 4 or 5 months before moving higher. So multiple paths to a breakout. This is just my preferred look at that. And the main takeaway again remains that when we look at this and we zoom out, we're looking at sort of a peak to be a right translated cycle some point towards the end of 2021 at a higher price. That's how we're positioned from an investment standpoint. And when we allow price to differ from the expectation, that allows us as well to be comfortable in our holding and our HODL strategy for the long term for that reason. All right, so I hope that was helpful. I hope that gives you an update on the 4-year cycle and the status. Again, just to summarize, I think everything is pretty much on track, and happy to be holding and comfortable with the way it is unfolding. The next point was taking profits and taking profit areas. Look, that's covered on the website, 4yearjourney.com. I have a spreadsheet there on positions, entries, and where I expect the next exit. I'm going to take some profit probably in the $26,000 to $28,000 area if we get there. I'm going to do that because if we get back above 20,000, there's a slight chance that we have some massive sort of bull trap, and that that becomes sort of a peak. Unlikely, but again, serves two purposes. One, just take some, bank some profit, cover the cost of the initial investment with just a 10% reduction in allocation because we've done a 10x over price, or maybe an 8x from the entry. So taking some profit at the $26,000, $28,000 level, allowing me to cover my investment, cover my risk, and then play with the house money, as they say. That allows me then to sit more comfortably as price begins to go into more of a steepened uptrend, and I won't have that urge to get out and take profit on any big pullback. And then from there, where the other profit targets will occur will most likely occur at increments there. Maybe the $10,000, $20,000 increments. I don't know just yet. A lot of it's going to depend on how the market's behaving at that time. But I will take profits on the way up, not on big 20% pullbacks. I'll take profits where I see a significant overbought situation. So for example, in an uptrend, if we see on the 60-day cycle level that we've seen a price above the Bollinger Bands for multiple days, and we see maybe a very high RSI level, that could be a point to take some profit and then be comfortable with that and then move on. So that's going to be an unfolding strategy that I will cover in future videos. Okay, S&P correlation, stocks. Look, Bitcoin has been behaving like a risk asset for a little while. There is definitely some correlation there. I'm not a huge fan of these temporary type correlations in asset classes. There are some asset classes that historically are very much correlated for various technical reasons, right? Whether it's a dollar and gold or other asset classes. But Bitcoin has so many different characteristics, whether it's sort of a risk trade, a retail leverage trade, whether it's a hedge, a store of value. There are different times, different narratives that will come into play for Bitcoin. So I don't see this correlation lasting for long, and also correlations set up for a lot of complexity in how you view performance of an asset class. So in general, I tend to say that understanding price action for one asset class on its own is difficult enough, right? Why complicate it with adding in other correlations where you don't know what the correlated asset is going to do as well? If I ask you what's the S&P going to do next year, given all the uncertainty and given the environment that we have, The answer is you don't know, and I don't know. So what good is it going to do to me if I start to try and correlate and try and determine where Bitcoin is going to go based on a correlation to something else that has just as much uncertainty as Bitcoin does? So I tend to stay away from that. I find that it's been something that doesn't help and only adds to the uncertainty. Another liquidity event. Yeah, we can have another liquidity event. I mean, there's possibility that the COVID situation comes back. Whether you're a believer in COVID or not, it's irrelevant, right? Participants care about it. Consumers care about it. Not everybody, but a good portion of the population does. And it impacts their behaviors, their consumption behaviors, their spending behaviors. And that has an impact on the markets. And that's what we care about. So there is definitely the possibility of another liquidity event. But in general, I like to say we've already had our liquidity event. The Fed has stepped up. Central banks in general have stepped up. And I don't think there's a risk of a liquidity event. I think there's more of a risk of a bear market event. And that's more of an orderly environment where we don't have a threat of insolvency, but we just have a revaluation of asset classes, whether it's stocks or whatever else it is. So in that case, and we saw this in gold in 2008, 2009, where it got caught up in the liquidity event to begin with, and then when stocks took a further dive, gold acted more like a store of value and a risk and a hedge play. And I think Bitcoin can do the same thing here. I see no reason why not. So another liquidity event could come. I don't see a reason why Bitcoin necessarily, at least for a intermediate time frame, can get caught up in that. Short term, of course, initially when there's a shock or a sell-off, it could certainly get caught up in that. We had a pretty big drop in the last 2 days in the stock market here, and Bitcoin has relatively held up okay. So that may be just a short-term example, but I think it can withstand another liquidity event. SF2 model, this had to go on my agenda because it was just asked by so many people. I got to be honest with you, I haven't put in enough research to give you an opinion on that. I know that price projections are similar, but I think where we probably differ is the longer term view, just going out maybe 10, 15, 20 years. I don't think markets and asset classes just go up and up and up and up. I think over time you're going to get more of these secular bull and bear cycles that occur. So I think ultimately price may get to where those models are looking at, but I don't think it's going to be in the same type of price structure. So I think that's where it differs. On the mechanics of the model, I really don't want to speculate. I think value is more about demand. It's not about supply. The supply of Bitcoin is simply a characteristic, and it's a characteristic of the network itself and what gives it value itself. But once that's established and defined, which has been from the beginning, it's really what participants want to value this asset class at. So it's about the amount of capital in total that wants to be allocated that determines the overall market cap of an asset class like this, and then you simply divide the amount of Bitcoin that's out there, the supply, into that to get the price. So it's not so much the fact that we have fewer or a limited supply of this that's driving it. That's just one of the characteristics, one of the features that gives it its attraction. Lengthening cycles, again, I don't really want to talk too much about this. It was covered in a previous video, but it was asked by so many people. I think I've also addressed this one pretty well in this video, looking at those monthly cycles. Cycles are about duration to a low. That's the way it's always been. And the peaks in the cycles are not what's measured when it comes to a cycle duration. Those just determine the translation in a longer term trend. And then should I buy altcoins? Look, I think there's going to be some altcoins out there, I don't know which ones, that are going to vastly outperform Bitcoin over the next 2 years. I don't doubt that. It's not going to be like 2017, in my opinion, where you had a huge amount of coins just blow Bitcoin away. That was a one-time deal. That whole ICO boom in itself was specific to that 4-year cycle. we will get, the whole narrative of all these blockchain projects and everything that they sold you on in those white papers. Look, it's pretty much proven that none of these have any real adoption. I know some firm believers in altcoins that have a huge stack still believe that their technology is the best, that there's a huge adoption there, but there really isn't in a lot of these. And I don't want people in the comments saying, well, this so-and-so coin has this and so-and-so coin has that. Yeah, I know. There's some that have some adoption. There's some that have some great tech. I just don't know if we, as a society, are ready for that type of mainstream adoption at this point in the evolution of this technology to warrant that. But again, some will do really well. I don't know which horse will do well. It's almost like saying, here's 1,000 horses and 20 of them are going to be absolutely phenomenal. And if you back one of those 20, right, you're going to get 100x return or 1,000x return. But if you back one of the other sort of 900 of those, they're basically going to fall and you're going to have to put them to sleep. The odds aren't great at that point. But what people are focusing on is the fact that 20 of those horses are going to make extreme amounts of money. And they're ignoring the fact that 900 of those or 980 of those are essentially going to die. Whereas with Bitcoin, I don't see that same dynamic, right? I think if those 20 horses are going to provide that type of return, then Bitcoin is going to be part of that equation. So Bitcoin is the superior by a factor of so much that it's a better risk-reward opportunity than anything that's out there. And I just don't see why anybody would want to risk that type of capital when Bitcoin's offering here potentially an extremely great opportunity with a pretty limited amount of risk involved. So that's my view on altcoins, and that's the reason why I don't want to promote them here. There are too many people already on YouTube and everywhere else promoting altcoins. I don't think most of them know what they're talking about, to just be perfectly honest, not singling anybody out. I think it's almost like playing a lottery in many ways. Now, maybe Ethereum is probably the one exception. I do have a stack in Ethereum. I think that will also be part of the future equation if we get to that top in the 4-year cycle. So I do have a small stack allocated to that. I don't cover it again here because, again, this is about the Bitcoin opportunity and what we see here. So I'm sticking to what I think is the far superior horse in this. It's not going to win, but it's the one horse that's going to make it to the end. And that's what I'm more focused on. I want to be there at the end with my capital intact. And that's, to me, more important than having a chance at picking an absolute screamer. Okay, so again, that's the video. I hope you've enjoyed it. I don't have any referral links for you to click on or anything else. If you could, hit the like button, subscribe for any future video, share this on social media. That would be great. Leave a comment if you like. I try to get to the constructive comments and try to reply. And again, thank you. I appreciate you listening, and I wish you all the best. Take care.